Secondary market action is what we've spoken about. A lot of primary market action also in focus. Jana Small Finance Bank IPO opens for subscription today. The price band between 393 and 414 rupees per share. The company aims to raise about 600 crore rupees as well. We're joined by Ajay Kanwal, who's the MD and CEO of Jana Small Finance Bank. Thanks a lot, Ajay, for joining in.
First, thank you, Mangalam.
Welcome to the capital markets. But before we, welcome you officially into the capital markets, before you list, I was looking at your DRHP, and there have been a couple of concerns with regards to regulators. I mean, as recent as October 2023, where the RBI has said there are some concerns with regards to CASA and loan growth, also raised flags on CRAR, which is basically failure to achieve target of capital infusion in earlier times. What exactly are you doing to, fix these run-ins with the regulator just ahead of your listing?
So, afternoon to you, Ekta and Mangalam. For the viewers, it's very simplistic. We are a 5.5-year-old bank. So obviously in 5.5 years, a lot of things have changed and we continue to improve every passing day. So the points that you mentioned, Mangalam, are around first, get CASA higher. We are at 20.5% in September. We were at 20.2 in March. So it's been an improving trend.
Okay.
But as we know, in the last 12 months odd, since the interest rates have gone up, most of the CASA money is moving towards deposits. So we're working very hard to get CASA even better, from 20.5 to a higher number. Second, they would like us to moderate our loan growth. Now, one thing I would like to mention about our loan growth, and I will take exact example of first half. Our growth in secured assets, which is home loans, loans against property, two-wheeler loans, MSME loan, again backed by immovable property, is grown by 20%, while unsecured has grown by 9%. So while we have grown very strongly and very well, our majority of our growth has been secured. Even if you take a 2021 to 2023 September window, our secured growth rate is about 40%.
Okay.
Now it also tells us that yes, we are focused on secured, but that's where the customer demand is. So that's the second piece on growth. Third piece on capital adequacy. So we did raise capital in last year, as well as in May last year. Our capital adequacy of September is 17.5%, out of which Tier 1 capital is very comfortable and strong at 15.6. As we all know, Tier 2 capital could very well be 50% of Tier 1, that's allowed, but we only have 1.2%. We could have raised more Tier 2 capital, but our bias was really that we had an IPO coming. It will take our capital adequacy to a much higher level. There is no point taking on Tier 2 debt, so which is why we...
What is much higher? How much does your CRAR become?
So 17.5 is where it would be. I would expect it to be like a 20 to 23%, again with only 1% of Tier 2.
Okay. So similarly on the CASA target, it's currently 20.5 you mentioned, right? So what is the RBI mandated? What do you want to get to? And by when?
So RBI is not mandating any targets.
Okay.
They only want us to get better, and that's the right answer, right? CASA is a lazy deposit. It brings down the cost of funds. So there is no target which is mandated.
So what is your internal target at least?
So yes, grow as fast, as quickly as I can. I can't give you a number, Ekta, because I'm in the IPO mode, so you will get it. But yes, listen, it is primary focus for us.
All right.
And we'll get it right.
I think one of the key concerns has also been the unsecured lending book, and you've spoken about that briefly. It currently stands at 42%. It's growing at 9%. What will it probably be by the end of this fiscal? What do you want to bring it down to eventually?
Okay. So I'll just make 2-3 important comments.
Right.
We began the bank in 2018. We had everything was unsecured because we had a microfinance origin. We decided two things. One, customer focus, which is let's give customer a full array of products that he wants. That naturally meant that I would turn secured because, the biggest borrowing of any customer is a home loan. So simple biases is we need to create a bank for middle of India. And if that is what we do, which is a one-stop shop, a bank of first choice for middle India, you will naturally turn secured. So 0% has turned into 58 odd percent, just 57.8% as of September.
Okay.
This is our 5.5 year change in spite of COVID.
Okay.
So you can now do the focus where we want to go. But I'll tell you principally where we want to get. the bank's balance sheet should reflect that of a customer. I believe that the customer's balance sheet is largely led by secured products. Housing, if he's got a house, it's loans against property, it's a four-wheeler, it's a two-wheeler. The credit card personal loan piece normally should be 10 to 20%.
So are we getting down to below 30% in terms of an unsecured book?
My bank, or rather our bank, Jana Small Finance Bank, should reflect that of a consumer's balance sheet.
All right.
That will be our attempt.
Okay, so
as soon as we can.
Okay, so you have given us a broad, long-term guidance of close to around 20-odd%. Just wanted two numbers from you. The first one is that there have been a lot of write-offs. So what are you looking at in terms of annualized slippage ratio, credit cost going forward? Secondly, that we're looking at is while, the RBI has said you have to increase your CASA, you have to reduce your loans and all of that and stuff, cost of deposits is increasing. Your NIMs are 7.8%. That's much lower than all the other banks which are listed right now. So what is the sustainable NIM band that you will work at? So on your credit cost and your NIMs.
So first, actual numbers as of September, 0.9% is net NPA with a provision coverage ratio of 65%.
Well, on that as well, just a follow-up, because your numbers have seen massive improvement in the first half. We see that typically before the IPO. So yeah.
Yeah, so I want to be very clear with you and everybody else watching. Numbers have got nothing to do with IPO. We are a scheduled commercial bank, which is a regulated entity. So numbers are numbers and they are absolutely correct the way they are.
Okay.
So that's rule number one. Second is when you're running a 0.9% net NPA with a provision coverage ratio of 65%, there is not much of credit cost you should expect. So that's point number two. I think important for us to all understand is if you take Jana's March 20 numbers, net NPA was always below 1%. COVID took it up, natural challenge, and COVID is resolved, so it's come back to where it should be. So I think that's the answer on credit cost. I think on net interest margin, see, all this results into what? It results on a return on equity, right? Ultimately, we are providing returns to shareholders, and my ROE is at 19.5. Because I can tell you that my 7.8% NIM is pretty much in a very competitive market. We are growing very well. As you know, year-on-year growth rate, Mangalam is about 40% on the loan side and about 37.7% on the deposit side. So we've seen very good growth in a market which is very competitive. So my NIMs has to be market-led. At 7.8% NIM with a 0.9% net NPA, I'm providing an ROE of 19.5. All I can tell you is that this is all well-grounded, something that you should expect from us. And and I did add it, so maybe I'm saying it second time. In spite of cost of funds going up in the first half, our NIMs have remained at 7.8. They were at 7.7 in March.
Okay. Just quickly before we wrap up, you have an unresolved dispute with Bank of Maharashtra on some receivables. Is that correct?
So, Ekta, all the information that we have to give, we have given. It's in the DRHP. Okay. But as you know, I can't say much about it because it's obviously not the right thing to do.
All right. We'll leave it on that note, Ajay. I'm sure we'll touch base once you do list and we'll get those numbers out from you in terms of
Once you're
details.
listed, you were able to give us all the projections.
Yes. I mean, listen, I will do what's correct, but if trend is your friend, and I think we should use that.
All right. Well, we'll wait by and we'll wait for the listing, get you more numbers from Jana Small Finance Bank. But on that note, we need to take a break. But we are excited to announce that CNBC-TV18 is back with the second season of India's largest campaign on gender parity. Join us for the mega launch event of HSBC presents CNBC-TV18's Future Female Forward, the women's collective with top leaders, influencers, policymakers and trailblazers all under one roof to chart a path towards bridging the gender gap. Live from Delhi on Saturday, 10th Feb, 5 p.m. onwards, only on CNBC-TV18.